Choose your hell, investment banking versus accounting. Picture to doors. Behind door number 1, a life of near constant stress, 80 to 100-hour workweeks. A daily grind that will seriously test your sanity. But it could make you a multimillionaire before you're 30. Behind door number 2, stability. Predictable, professional career, a 9 to 5 that's more like an 8 to 7. And the guarantee of a life outside the office, but for a fraction of the pay. This isn't a game show, it's the choice between two of the most popular and punishing careers in finance. Investment banking and accounting. By the end, you'll know which version of hell is right for you. We're staging a head-to-head battle. A 5-round fight for your future. Comparing these two titans across the only metrics that really matter. First, the grind. Which career will break you with its hours? Second, the gold. Where's the money? And how high does it go? Third, the glory. Which path earns more respect and opens more doors? Fourth, the escape routes. What are your options when you inevitably burn out? And finally, the sanity check. A brutally honest look at what these jobs actually feel like day to day. By the end, you'll have a clear verdict. Let's get into it. Round 1. The grind. Work-life balance. Let's start with the most infamous part of these careers. The soul-crushing workload. This is the grind. In one corner, we have the heavyweight champion of terrible work-life balance, investment banking, and yet, the legends are mostly true. As a junior analyst, the bank essentially owns your life, while the 100-hour workweek gets thrown around a lot. It's more of a spike during live deals, not constant. But let's be clear, an 80-hour week is often considered a good week. A predictable schedule is a fantasy. A managing director can blow up your Friday night at 9 p.m. with a fire drill that forces you to pull an all-nighter just to update a pitch deck for a meeting that might not even happen. Your weekends aren't yours. They're just overflow workdays. This whole environment is built on intense pressure and zero tolerance for error. A mistake isn't just embarrassing. It can have huge financial consequences and bring the wrath of a vice president down on you. The burnout risk is astronomical, which is why the 2-year analyst program is a revolving door. You are front-loading an immense amount of personal sacrifice. In the other corner, we have accounting, specifically starting in public accounting at a Big Four firm, Deloitte, PwC, EY, or KPMG. At first glance, it looks like a paradise in comparison. For much of the year, the average workweek is a more manageable 45 to 60 hours. But don't think it's a walk in the park. The defining feature of the accounting grind is that it's cyclical. During busy season, usually January to April, hours can explode, often hitting 70 or even 80 hours a week. The stress here is different. It's less about last-minute chaos and more about methodical, deadline-driven pressure. Making sure every single number is perfect. You're ensuring a company's books comply with a mountain of regulations. While busy season is a nightmare, there's a light at the end of the tunnel. The off-season provides a much-needed breather, where hours can drop back to a more normal 40 to 50 per week. This makes the career far more sustainable in the long run. So, who wins on the grind? While public accounting has its own circles of hell, it offers periods of normalcy that are basically non-existent for a junior investment banker in banking. The grind is a relentless, year-round marathon with no finish line. In accounting, it's a series of brutal sprints, followed by time to catch your breath, while providing at least a sliver of a life. Accounting takes this round.